Good evening. Tonight, I'll be presenting a three-point plan for the Yamaha Motor Corporation heading into a post-COVID world. This consists of 1, divestment from a current branch or division of the firm, 2, a new branch or division for the firm to invest into, and 3, comparisons between 2 identified markets for Yamaha to enter into and their entry modes. Yamaha is headquartered in Shizuoka, Japan, and was founded in 1955, specializing in motorcycles. It has since expanded to 4 core competencies. 1 is land mobility products, 2, marine mobility products, 3, robotics and industrial products, and 4, financial services. Yamaha is identified to be in the 6th stage of the business cycle. It has reached a level of maturity and may possibly begin to decline. And to avoid such a decline, divestment is recommended, along with new investment to reinvigorate the company. We've chosen financial services as financial services offers wholesale leasing, insurance, and financial services to its consumers. These consumers are the customers of the company in the other 3 branches, meaning that this financial services branch is wholly reliant on the sales of the other 3 and is merely a supplementary service in the firm's existing portfolio. The 2020 report identified that the financial services suffered a net sales increase of 12.5%. However, this was outweighed by the losses, and these losses were attributable to fluctuations in the foreign exchange market, as financial services the majority of sales are overseas. And the Japanese yen in 2020 was trading higher, meaning that according to principles of currency exchange was not favorable for Yamaha. Importantly, the financial services market, wherever it be in the world, is actually extremely fragmented, with a myriad of competitors offering alternatives and substitutes. And some of these competitors may even specialize in offering financial services. And all in all, Yamaha is at a distinct competitive disadvantage regarding its financial services branch. The second aspect of this 3-point plan recommends that Yamaha invests in a new competency or branch that has a recognized competitive advantage. As such, it's recommended that Yamaha invests in developing a new defense equipment branch of the conglomerate. Defense was chosen due to 2 major reasons. 1, Japan's current domestic and foreign factors, and 2, Yamaha's ability to gain and maintain a competitive advantage in the sector. In terms of Japan's domestic factors, prior to 2014, Japan adhered to a strict pacifist home and foreign policy, stemming from its losses in the Second World War. The country was constitutionally prohibited from maintaining the ability to wage war, and this was strictly extended to a complete arms export ban on Japanese firms, meaning that Japanese firms could only sell to a Japanese pacifist government. From 2014 onwards, this export ban was actually lifted, and Japanese companies could once again sell arms abroad. This now sets the domestic scene for Yamaha to enter the market. Regarding foreign factors, the ban's lifting was chiefly due to threats posed by North Korea and China to Japan, and Japan recognized the need to develop its own defense industry and that of its neighbors. The government also recognized that developing an industry could possibly stimulate its stagnating economy and has since encouraged research and development into its own domestic defense industry. Yamaha can gain a competitive advantage in the Japanese defense industry due to 3 reasons. 1, as identified in the 2020 report, Yamaha's products lead the industrial robotics and automation sector, particularly drones and unmanned vehicles. 2, as it holds a competitive advantage in the civilian robotics industry, Yamaha can adapt this to a military context in regards to drones and automated vehicles. And thirdly, Yamaha will be able to capitalize on the Japanese country of origin effect due to Japan's international standing as a high-quality manufacturing and technologically advanced economy. Moving on to the second part of the 3-point plan, the US and India have been chosen as possible entry markets for Yamaha's defense branch. For each market, 4 major concerns of particular importance Yamaha were examined. These were the post-COVID state of the nation's economy, the cultural and psychic distance between the market and Japan, bilateral relations between that country and Japan, and whether Yamaha would be able to gain and maintain a competitive advantage in that defense's industry. For the United States, the economy, despite a slight retraction in the American economy during the 2020 period, the nation is now bouncing back with the majority of the country returning to normalcy. Notably, the United States has continually earmarked taxpayer funds towards military spending, especially since identifying China as the main 21st century adversary of the country. This provides a very conducive domestic environment for Yamaha to expand into, given the need for defense equipment and technologies. Culturally, however, the US and Japan could not be further apart. Globesmart and Hofstede's both placed the 2 cultures as polar opposites in each dimension and category, and this would become an obstacle if Yamaha chooses to expand in the US. Bilaterally, the US and Japan are engaged in a military alliance, and both share close political and military ties. However, regarding Yamaha's entry, this would not be a factor, given that the alliance is between government and government with little private sector considerations in place. Regarding the competitive advantage, it's unlikely for Yamaha to gain, let alone maintain, an advantage in the US defense industry, as this is due to the US's position as home to the world's most renowned and established military companies. These companies have decades of experience. Their products have been tested in warfare, and they maintain a massive barrier to entry for any prospective entrant. It's simply untenable for Yamaha to foster a competitive advantage in the US defense market. Moving on to India, India has the third largest military spending after the United States and China, and this increased even during the pandemic due to the Chinese and Indian border tensions in 2020. Of the increase in expenditure, some portions have been earmarked for modernization and purchase purposes. For Yamaha, there is a clear opportunity to expand into India and take advantage of this increasing expenditure. Contrary to the United States, India and Japan are quite similar culturally, although there are still some differences that remain, such as Japan having a much higher uncertainty avoidance and masculinity dimensions. Bilaterally, Japan and India are inside the same military alliance, with Japan since 2014 exporting some arms and defense technologies to India directly. Competitively, Yamaha would be able to gain a competitive advantage in India, although India has its own domestic military producers, including those that manufacture drones and automated technologies. But overall, India still heavily relies on foreign military technology and equipment. Yamaha can then capitalize on Japan's country of origin effect. Following the analysis, it's clear that India provides a more fertile environment for Yamaha to expand into. The final part of this three-point plan discusses entry modes into India. When comparing direct and indirect entry modes, it's recommended that Yamaha undertake indirect entry via exporting. Despite Yamaha actually having production plants in India, exporting is still ideal as military technology is sensitive and the vast majority of the world's defense firms choose to export. And number two, China's perception of Yamaha motors would be negatively affected if direct entry was chosen. Indirect entry would minimize Chinese consumer backlash against Yamaha motors. And number three, export and production in Japan would still preserve its country of origin effect. And if successful, maybe Yamaha could explore the possibility of direct entry via JV or greenfield, but this would have to be limited by the sensitiveness of military technology. And thank you for listening to today's presentation.